Welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services. And the weakness persists on the market this Monday morning after last week choppy trade, and of course on Friday we did see the markets losing ground. Uh, the trend is continuing this morning, but like I mentioned last time, I think we had mentioned that we are close to the lows, and then of course we did see a little bit of recovery, and then again all those gains were wiped out because of the profit booking and of course the sell side figure from the foreign institutional investors. Uh, Stabilizing, of course, we did start with a gap down, but there has been a recovery as I speak to you. And just to give you some levels on the market, well, Sensex is trading close to about 56,670, down about 500 odd points. Nifty is close to 17,000, down about 160, 170 odd points. And the recovery that is visible after a gap down opening is on the Nifty Bank, which has recovered from the initial losses and right now trading in the green, up about 100 odd points at 36,150. This is the Nifty Bank. The positive is from the energy basket, wherein we have seen a huge downtick. Brent is trading at about $103 a barrel, and NYMEX is below $100 a barrel at about $99 a barrel on the NYMEX. And this is primarily because of the lockdown that has happened in China, larger cities in China, and the demand on the lower side. This is primarily the reason. And China is, of course, like we all know, one of the largest consumer of crude oil, like India is. On the positive side, well, we did see numbers from ICICI Bank last week on Saturday, better than expected numbers on all parameters. And like I spoke to you last week and even before that, because of the high crude oil prices, if there are certain sectors that you should look at is related to service industry, banking, NBFCs, IT, insurance companies, telecom service providers are a few sectors that I had mentioned. And the sense is that the outperformance from the private sector bank will continue. But at the same time, our sense at Geojit is there is going to be a catch-up that is going to be visible as far as some of the public sector banks are concerned, likes of State Bank of India, Bank of Baroda, Bank of India, Indian Bank, etc. Well, this week we also have Axis Bank numbers coming through, and possibly you will see the similar kind of a trend that was visible on ICICI Bank Q4 numbers. So the earnings has not disappointed whatever we've seen up till now, barring of course IT, wherein we saw some concerns on some parameters, and rightly so. And historically, for the IT sector, this quarter is a little bit subdued, so we have to take it with a pinch of salt. But great opportunity to nibble into large cap and certain mid cap IT stocks, and surprisingly, some of the mid cap names have done well. Cyan delivered better than expected numbers. L&T Technologies delivered better than expected numbers. Persistent System is something that comes out with numbers this week, is also one of the mid cap IT names. So I think this selective buying should be done on IT, banking, NBFCs, telecom service operator, large telecom service operators, and of course insurance, life insurance related companies. Well, don't see any huge concern immediately on the horizon. The only problem is that the palm oil has hit India quite significantly, and India is one of the largest consumer of various types of oil, including palm oil. And this has created a little bit of negative overhang for FMCG companies, because palm oil is basically a large input raw material for FMCG companies, which are associated with edible oils, soaps, detergents, etc., etc., etc. So there could be a little bit of impact, and like we mentioned earlier also, that FMCG sector can see an overhang for some time, at least for the next 1 or 2 quarters, especially in this financial year. First, second quarter looks a little bit sticky for the NBFC sector. I beg your pardon, FMCG sector. Overall, buy on dips. I think again I would mention that like last week I mentioned, we are close to the bottom, and we could find some kind of base over here, and then we can recover. The only issue is global and local news flows will dominate the market. Metals and cement are the other pockets wherein you could see some amount of bargain hunting. And surprisingly, auto companies have, like I mentioned last time, Tata Motors did and has taken a price hike of more than 1% on various products across categories. We did see Maruti and M&M also hike their prices of vehicles across verticals and offerings. So I think auto and auto actually is kind of recovering from the initial lows that we saw. So auto is also one of the contrarian buys, along with metal, cement, and of course two sectors that I mentioned, specialty chemicals and real estate sector. I think you should look at basically this 6-7 sectors and large cap in mind, with some select mid cap as well. No huge scare as far as the domestic COVID related cases. Of course, we've seen an uptick, but there is no large concern. And I guess it should stay this way unless until something drastic happens or a new variant is identified as far as the pandemic is concerned. So my sense is, again, for the entire calendar year, I think possibly you might see some momentum coming back in second half, post June end and starting early July. Monsoon will also be one of the triggers, wherein the Met Department has predicted a normal long-term average monsoon. So consecutive, I think 4th or the 5th year that India is going to witness that kind of monsoon, and again a huge positivity. So selective buying, sectorial performance will be there, but on the benchmark indices, I think the returns for this calendar year ending December 2022 could be a little bit limited on the lower side. This is the preliminary, kind of indicators that we can gather. Remains to be seen how the second half does, and how does the Indian incorporate report their numbers as far as this financial year is concerned. Thank you very much for your patience hearing. I'll see you again next week. Take care. Stay safe. Bye-bye.